1962. IBM tops the list because big companies rent mainframes like utilities, long contracts, high switching costs, and a sales force that embeds inside corporate IT. Exxon rides post-war highway expansion. More cars, more gasoline, more miles driven. The mid-60s look frozen, but the economics differ by name. Procter & Gamble wins shelf space in supermarkets. Coca-Cola scales bottling networks. IBM still collects recurring service fees, a subscription model decades before software. Walmart is barely visible here, but Sam Walton's model is the story. Build distribution hubs, squeeze suppliers on volume, undercut small-town retailers. Scale in logistics, not manufacturing, is the weapon. The 1973 OPEC embargo triples oil prices. Exxon's cash flow explodes because demand for fuel is inelastic. Drivers still fill up. Energy stocks leap, while IBM's hardware contracts look expensive in an inflation shock. Stagflation rewards companies with pricing power. Oil producers pass through costs. Consumer staples raise prices on household goods. Growth stocks with distant profits get crushed. High interest rates make future earnings worth less today. IBM launches its personal computer in 1981 and accidentally seeds its own challenger. The PC sells fast, but the value leaks to Intel chips and Microsoft software. Mainframe margins still dominate this chart, but the center of gravity is shifting. Microsoft is tiny on this chart, but the mechanism is already working. IBM picks DOS for its PC, and Microsoft keeps the license for every clone. Zero marginal cost software sold per machine, a royalty on the personal computer boom. Wall Street's 1980s bull market lifts GE's finance arm and industrial units together. Jack Welch buys market share and cuts costs. Conglomerate scale plus cheap debt makes GE look unstoppable, even as PCs spread through offices. Recession hits, but Microsoft keeps climbing. Windows 3.1 and Office bundle into corporate budgets. Once a company standardizes, switching costs lock in the license revenue for years. Intel's Pentium chips power the corporate upgrade wave. Walmart keeps grinding lower on logistics. IBM, once untouchable at number 1, is fading hardware commoditized while software and retail scale take the lead. Netscape's IPO lights the match. Intel benefits from the Wintel duopoly. Every new PC needs a chip. Cisco sells the router's wiring offices to the internet. Demand is physical. Servers, switches, and silicon. Microsoft hits its stride as enterprises roll out Windows 95 and Office 97 together. Intel's fabs run flat out on the upgrade cycle. Margins swell because software and chips scale faster than factories. Telecom companies borrow billions to lay fiber that won't pay off for years. Lucent and WorldCom inflate the cap-weighted story. Investors pay for users and clicks, not cash flow, until the math stops working. When the bubble pops, fiber goes dark, and telecom debt defaults. Pfizer and Johnson rise on steady drug pipelines. Walmart benefits from trade-down shopping. Survivors are balance sheets, not story stocks. By 2003, Google is private but profitable on search ads. Pay-per-click ties revenue directly to intent. JP Morgan and Citigroup rebuild trading desks. Exxon gains as China's factories demand more crude imports every quarter. Citigroup packages mortgages into securities and earns fees at every step. Low rates pull buyers into homes. Bank trading desks lever up. Exxon climbs again as China's industrialization pulls crude demand higher. GE still looks like America's company. Turbines, appliances, and GE Capital earnings spread on loans. Exxon prints record profits as oil touches $80. Finance and commodities own the leaderboard. Subprime defaults chain through CDOs. Citigroup needs a bailout. AIG buckles on credit default swaps. Housing supply gluts, bank capital vanishes, and finance names collapse off this chart in months. Zero interest rates revive risk appetite. Amazon reinvests every retail dollar into warehouses and prime shipping. Google's search ads recover with small businesses advertising online again. Cash-rich platforms compound. Apple's iPhone captures carrier subsidies and App Store take rates. Each upgrade cycle sells high-margin hardware plus services. Samsung competes on hardware, but Apple keeps the ecosystem lock-in. Amazon Web Services sells compute by the hour. Data centers become a utility bill. Microsoft buys LinkedIn and pushes Azure to enterprises already on Office. Recurring cloud contracts replace one-time license boxes. Visa and MasterCard ride the shift from cash to cards to digital wallets. Every tap takes a network fee. Berkshire Hathaway climbs on insurance float and stakes in Apple and Coca-Cola. Toll bridges, not factories, fill the top 10. Facebook's mobile ad engine targets users by behavior, not just search keywords. Google's Android and YouTube add video inventory. Network effects mean more users attract more advertisers, a flywheel industrial companies never had. Amazon's Prime membership locks in shipping and streaming. Customers renew before they compare prices. Walmart fights back with grocery pickup and scale in small towns. Retail becomes a logistics arms race measured in warehouse square footage. Apple's trillion-dollar milestone comes from 2 billion active devices and rising services revenue, iCloud, music, and the App Store stack on top of iPhone replacement cycles. Lockdowns shift spending overnight. Shopify and Amazon deliver goods. Zoom sells meetings. Netflix sells hours at home. Cloud demand spikes for remote work. Stay-at-home winners see revenue jump while oil demand craters. Tesla surges into the conversation as EV demand meets retail trading mania. Low rates and stimulus checks push money into growth names. Meta and Alphabet still win on ad dollars, but the market is also pricing a battery supply chain from scratch. The Fed hikes to fight inflation. Unprofitable storage stocks sink, but Apple and Microsoft keep buybacks and dividends funded by enormous free cash flow. Energy names like Exxon surge on supply fears after Russia invades Ukraine. ChatGPT triggers a capex race. Hyperscalers order H100 GPUs by the truckload. Nvidia's CUDA software stack means switching chips is painful, so training runs concentrate on Nvidia's silicon, and pricing power follows. A handful of names now drive index returns. Microsoft embeds Copilot into Office and Azure contracts. Alphabet monetizes search plus YouTube while spending on Gemini. Concentration rises because each winner has a distinct toll booth. Nvidia crosses $4 trillion as data center backlog stays sold out. Apple leans on device upgrades and on-device AI. Microsoft sells AI as an enterprise add-on. The fight is who owns the compute layer and who taxes every query. 6 decades of leaders, oil shocks, PC royalties, mortgage securitization, smartphone ecosystems, and GPU shortages. The names rotate, but the pattern repeats. Scale, pricing power, and the bottleneck everyone needs. Subscribe to Tickertales for more history told through numbers.